Ask you something. Do you remember when MTN shares were around 169 era? A lot of people saw it, but they chose to ignore it, and some felt it wasn't the right time for them to buy, so they waited. Let me ask you, what if you actually had the chance to buy another product, like in time of MTN, but this time around, not after the growth, but before it, will you? And then later, the bigger opportunity came. That is how it usually happens. We only realize after it has yielded or it has grown. The price doubled or increased to a particular point. Right now, the Dangote Refinery IPO is coming. Drum roll! This is being positioned as the biggest investment opportunity in Africa. This is not just a company, this is the largest refinery in Africa to bring a major role to the economy. The question is, will you watch this happen like before, or you take position early this time around? Open a stockbroking account, get informed, and be ready before it goes public. Because opportunities like this don't wait and they don't come often. Download the Lee Trader app on your App Store or your Play Store to get started. Toodles! Let me ask you something. Do you remember when MTN shares were around 169 era? A lot of people saw it, but they chose to ignore it, and some felt it wasn't the right time for them to buy, so they waited. Let me ask you, what if you actually had the chance to buy another product, like in time of MTN, but this time around, not after the growth, but before it, will you? And then later, the bigger opportunity came. That is how it usually happens. We only realize after it has yielded or it has grown. The price doubled or increased to a particular point. Right now, the Dangote Refinery IPO is coming. Drum roll! This is being positioned as the biggest investment opportunity in Africa. This is not just a company, this is the largest refinery in Africa to bring a major role to the economy. The question is, will you watch this happen like before, or you take position early this time around? Open a stockbroking account, get informed, and be ready before it goes public. Because opportunities like this don't wait and they don't come often. Download the Lee Trader app on your App Store or your Play Store to get started. Toodles! Let me ask you something. Do you remember when MTN shares were around?
Good morning, Eva clients. It's always a pleasure having you with us on this call. On today's segment of the Fixed Income Market Review, our practice will be taking you through the key happenings of what transpired last week in the fixed income space, our expectations, and the actions you should take regarding your investments. Okay, starting with the money market segment. Last week, we saw some moderations in the liquidity levels. Our system liquidity closed week on week at 4.41 trillion naira. And this was due to some settlement obligations of the OMO primary auction that held during the week. This moderation in turn reflected in the funding conditions as we saw a slight easing at the overnight rate to settle at 22.3%, down by 19 basis points, while the open repo rate remained flat, which tells us that the system was still relatively stable despite the outflow. Looking at the last auction, NTB auction, CBN offered 700 billion across the three tenors, which was heavily oversubscribed by about 2.3 trillion naira. And as was emphasized last week, this is a clear sign that more and more investors are trying to take advantage of the current yield levels and lock in their funds for as long as possible. It was even evident that the strong buying interest at the long tenors, looking at where inflation is heading, especially how inflation has risen, it is best you take advantage of these levels before market dynamics shift. At the Treasury bills secondary market, we saw that the week closed on a mixed note as investors were positioned cautiously ahead of the CPI release, they were trying to assess the direction of where inflation was heading. And as expected, inflation ticked higher from 15.06% in February to 15.38% in March. And we can say that this increase was unexpected, especially with the power tussle at the Middle East that pushed global prices, oil prices, which impacted the food inflation, pushing it to 14.31%, and transport even higher to about 16.9%. But we noticed that after the CPI data release, there was some renewed buy interest at the mid to long end of the curve, and we even saw some sell-off occurred at the short end. But overall, average yield advanced by 3 basis points to close the week at 17.5%. At the FGN bond market, we saw a contrast to what we saw the previous week. The week ended on a bullish note with selective buying interest focused on the short and mid segments of the curve. Most actively traded bonds were the 2028 bonds to 2031, 2034, 2035, and the 2053 maturities. Overall, the average across the benchmark bonds declined marginally by 2 basis points to close at 15.87%. On the foreign exchange market window, we saw an appreciation across the official and parallel window. At the official window, we saw market close at 1,355 naira. And on the parallel market, we saw that appreciate to 1,400 naira. Looking ahead, we are expecting that funding rates to remain broadly stable, bearing any major liquidity outflow. For the Treasury bills secondary market, we expect that liquidity will remain the key driver, and we still expect that we will see some sustained buy interest, especially around the longer end tenors. Also, we expect that the FGN bond secondary market is to trade in line with system liquidity. We're also expecting to see NTB primary auction that is scheduled for this week, Wednesday, with CBN offering about 750 billion across the three tenor. Given how we have seen strong investors' appetite in the last 2 weeks, we still anticipate another oversubscription with possible mild compression on the long tenors. For updates on the Middle East tension, we still see that resolutions are hitting a rock. Over the weekend, we saw that the Strait of Hormuz was closed again just as after it was reopened. And we also know that the current 2-week ceasefire truce is expected to expire this week, that's on Wednesday, 22nd of April. And we are hoping that before then, they should come to a near compromise at the soonest. But nevertheless, we'll continue to monitor the developments happening in that space closely and keep you updated accordingly. With all that said, our goal at Lead Capital is to ensure that you fully enjoy the dividends of the market. as every opportunity gives us a solid chance to extract real benefits for your portfolio. That is why we have carefully curated several products to match your different objectives, from our fixed income fund to the balance fund and the dollar fund on the mutual fund spectrum. We also have the Gazelle portfolio, which offers competitive rates for the fixed deposits, and our Eurobond trading investment options. Whatever your investment goal may be, these products are designed to help you benefit strongly from the market. With all that being said, we have come to the end of the fixed income segment. I will now hand you over to our seasoned in-house equity analyst to take you through the happenings of the equity space.
Good morning, esteemed investors. I am Emanuela, and I'll be walking you through the equities market happenings for last week, ended 17th April, and then the outlook for this week as well. So this is the NGX ASI and the NGX 30 indices, and you can observe a steady bullish trajectory from the start to the end of the week, with no significant pullbacks, which suggests sustained positive market sentiment. The NGX 30 index, which tracks the most capitalized and liquid stocks, consistently outperforms the broader market, indicating the large cap stocks are driving market gains. On the other hand, the ASI follows a similar upward pattern, reinforcing that the market-wide performance is aligned with the strength seen in the blue chip equities. Midweek, particularly around Wednesday, we begin to see a slight acceleration in growth, which may reflect increased investor participation or positive market catalysts. By the end of the week, both indices reached their highest levels within the period, closing strongly and signaling continued investor confidence and buying pressure. This is particularly notable here in the consistency of the upward movement. This isn't a volatile rally, but rather a gradual and stable appreciation, which is typically more sustainable. Overall, this trend suggests a market that is not only positive, but also structurally supported. And this sets the context for the next slide. The financial service sector clearly dominates, according for approximately 70% of the total traded volume, which indicates that market liquidity is heavily concentrated in banking and financial stocks. This level of dominance typically reflects high investor participation, ease of entry and exit, and strong retail and institutional interest within the sector. The other categories contribute about 17%, suggesting a moderate level of diversification, though still significantly lower than financial service. The service sector accounts for roughly 9%, indicating relatively lower trading activity, which may be due to lower listed players or lower investor focus. Finally, oil and gas contributes just 4%, which is quite notable given the sector's economic importance. This may reflect reduced short-term trading interest or more long-term positioning by investors. The total turnover of 3.59 billion shares were worth 195.31 billion naira was traded, in contrast to a total of 3.36 billion shares, valued at 151.95 billion, that exchanged hands in the previous week. Financial service industry led the activity chart with 2.5 billion shares, valued at 94 billion, with contribution of 69.62% and 48.13% to the total volume and value respectively. Service industry followed with 329 million shares, worth 3.5 billion. Third place was the oil and gas industry, which with a turnover of 152.47 billion shares, worth 42.51 billion. Trading in the top three equities, Sterling Bank, Access Holdings, and Zen Bank accounted for 1 billion shares worth 46.08 billion and contributed 28.92% and 23.59% to the total equity volume and value respectively. Market capitalization appreciated by 6.6% and closed at 139.83 trillion. Sectorial performance, 4 out of the 5 major indices under coverage closed positive, which are the NGX banking, which closed week to date at 11.85%. Consumer goods week to date closed at 3.39%. NGX industrial 1.26%, and NGX oil and gas, which closed at 17.59%, while NGX insurance closed negative at 0.04%. Here we have our earnings snapshot for audited and unaudited year for the year 2025. So our coverage includes Stanbic, GTCO, Zenith, First Holdco, Corn Oil, and the rest. We have their profits after tax for 2024 and 2025. You can see the change. You can see stocks like GTCO and positive, GTCO, Zenith, First Holdco, Interbrew, Aradel, Mansard, Presco, Saco, TIP, and then ETI. Our investor delight stocks for the week, we have GT Bank, Dangote Cement, Seplat, NASCON, CAR PLC, MTN, Nigerian Breweries, Vitafoam, and NEM Insurance. This snapshot shows our recommendations for the week. So under the buy recommendations, we still have stocks like AXA, Mansard, UCAP, Dangote Cement, Etana, Fidelity, Transcorp, and NEM. And for the hold recommendation, we have ICO, Zenith Bank, Wema Bank, Okomo, Unilever, First Bank, and the likes. For our sell recommendations, we have Lasaco, Transcorp Hotels, Geregu, Boasment, Conoy, and Mayor PLC. This is a schedule of the annualized dividend hunting for the year-end 2025. And we have here a couple of stocks, their last prices, total dividend, and projected final dividend for the year-end 2025. So we have stocks like Access Bank, which yet to declare their dividends or even release their results. And we saw quite an uptick in the stock for the last closing, last trading day of last week. And we're expecting the results to hit the market anytime soon. And from the sentiment, investor sentiments last week, we expect something very interesting from them. So also have FCMB, Stanbic, UBA, Zenith, ICO, Mansard, NEM, and the rest of them. For our weekly stock recommendation, we have number 1 to 24, which are our buy recommendations for the week. Number 25 to 33, which are our hold recommendations, and 34 to 42, which are our sell recommendations. Documents will be sent to all our investors, so you can go through them and understand them. For dividend payment tracker, we have a list of stocks and the dividend payment windows for each of them. So aside from NGX, Lafarge, MTN, Afribrewed, and UCAP, which are closed, the other stocks that are listed here, the qualification days are still open, so we can take positions in these stocks to take part in the proposed dividends. Next slide. Last week, the Nigerian stock market ended in positive territory for the 3rd consecutive week. The bullish sentiment was as a result of investors positioning for the upcoming Q1 2026 corporate results, which should start trickling from this week, as well as the 2025 dividend payments still within the qualification date. Guinness has already announced its Q1 2026 results. They proposed interim dividend payment of 2 naira per share. However, markets still await the results of corporate actions of Access Corp, Fidelity Bank, and UBA. We expect this week to be dominated by investors positioning for the upcoming Q1 2026 corporate results, which are expected to be good. This may likely result in a bullish market for the week, with the NGX All Share Index testing above its all-time high of 217,131.54 points to close between the psychological resistance level of 220,000 points, while market capitalization is expected to breach 140 trillion naira threshold. We encourage all lead investors to download our general stock recommendation and our morning insight for weekly investment decisions. For this week, we expect the bulls to dominate most of the trading days. The signals are clear: strong participation, sector leadership, and institutional positioning. The opportunity now is in being early and deliberate. We advise investors to begin building positions in our recommended names and stocks to take advantage of current market direction. Thank you. So we can now take questions. You can indicate by raising up your hand or typing your questions in the chat box. Okay. So we have a question here. What exactly is driving the increase in the market turnover? So the market is largely driven by renewed investors' participation. Like we said earlier, we can see most of the results for 2025, and we're also expecting Q1 for 2026 coming in, and this has increased, investors' confidence because the results we have been seeing are really nice. So especially in large cap stocks. So when you see both volume and value rising together, it usually reflects real capital inflow rather than speculative spikes. Well, what makes our recommended stocks stand out in the market? Well, I'll say our recommendations are based on strong fundamentals, liquidity, and positioning within the sectors. In a market like this, those companies listed are companies most likely to benefit from sustained capital inflow and deliver consistent results. Okay, so what risks should we be mindful of going forward? So the risk should be over concentration, right? We implore our investors to diversify their portfolio, where market performance depends heavily on a few stocks or sectors. Additionally, any negative macro or policy shifts could slow momentum, so positioning should remain disciplined and selective. So we have what is the expected impact of the upcoming name change of Lafarge to HBM? Are there any insights on the company's future operations and performance?
Okay, for Lafarge, the change of name sometimes may not necessarily impact on the performance of the company. What is key or what is really driving the company is to look at the performance. We've seen companies coming to this market to change their name. So by the time they change their name, we also look at the structures of the shareholders and what are the plans they also have in place. But for Lafarge, we still place in our buy recommendation because even if you look at it, the Lafarge has been operating in an industry that's really driving the economy, and then they've actually benefited from most of the government capital projects. So after markdown, the price came to around 212 naira, but we immediately also alerted our clients that this stock is still on strong buy recommendation, and we could see that immediately after the markdown, the price also traveled from 212 naira to almost 243. So there's room for growth because we have only 3 listed companies under cement industry, and then we've seen government investment in the infrastructure. So there's no way they will continue to benefit. So currently, the change of name may not necessarily affect the performance. So, but after the change of name, the market will be communicated, and if there's any information we think is necessary to advise investors as regards to review their portfolio, we'll communicate to the house. But for now, we can't actually second guess what is going to happen after the change of name to the IBM. Thank you. About the Access Bank, there is no any news now for the Access Bank, but we've seen a lot of participation in the Access Bank, over 90 million traded on Friday. And when such thing happens in the market, when you see a strong back interest, a strong position taking, high volume trading, nothing is happening around the company. But for a very long time, Access Bank has been under the capital recommendation because looking at various metrics, it's still undervalued. But we believe by the time they also consolidate all the acquisition, the asset, they have the biggest asset in the banking industry. After this consolidation, we are likely to see the bank and investor will now begin to enjoy the gains of expansion by the Access Bank. But for this week, we still put it on recommendation, and we're also expecting a very good result that is also coming out from the Access Bank. Just like we also advise the house that over the time we've been placing ETI in our buy recommendation, even though the company has not been paying dividends, but at least they came out. They came out last week, I beg your pardon, and they declared 16 cents as dividends for the 2025. So similar things also likely to happen for the Access Bank. Let's continue to take advantage. Even at this current price, it's still a good buy. Thank you. For the Dangote refinery, is ZRC going to participate in Dangote refinery? We've been sending out correspondence to all our clients. Late Capital is part of the joint stockbrokers to the Dangote refinery. So all the videos, all the correspondences we have sent to all our clients is to get them prepared for the upcoming Dangote refinery, which we believe that in the couple of weeks, in a couple of months, is going to take place. We're encouraging all investors. If you have an account with Late Capital, you can start preparing your cash flow so that by the time they offer the market, you will not be under unnecessary pressure. You can invest in other products in preparations for that. Why we're also expecting that between now, as been stated by the issuer, between now and the end of July, the refinery is going to, the IPO is going to come out. What are you recommending? Our recommendation for the Presco and Okumu? If you look at our recommendation, they are both on hold for this week. We haven't actually seen movement, but they have actually moved towards our target price. We've seen result for the Okumu. When the price actually drops or go below this current level, we are likely to change the status either from the hold to buy, but it has actually gotten to the peak or our target price. Why for the Okumu? I mean, for the Presco, a similar thing until we see the result of the Presco. When we see the result of Okumu, we're likely to take a decision. Our research team will take another critical evaluation, either to place it on buy. But for now, we want investor to also place it. That's why we quickly place it on what? On hold, because it's a very sensitive sector within the world, within the economy, agriculture. So anything can happen. Thank you. UCAP, what is happening to UCAP seems not to be against the bullish market. You could say they have actually created a lot of outstanding shares from a bonus of 2-for-1 is huge in this market. When company has a lot of outstanding shares in the market, some people who have actually received their own bonus will beginning to sell to the market. But if you look at the recommendation, the company hasn't done very bad because those who bought the UCAP at 22 naira and they've gotten a bonus of 2-for-1. If you look at the current market price, it means their cost of the current price of that one for which the 1 unit they bought at that time is around 16 naira. And if you're looking, if we actually wanted to calculate the dividends also receiving, that would be 70 kobo times 3. That's almost 2 naira 10 kobo. So you have to look at it from that perspective, except the new entrant in the market. But UCAP, looking at the industry, is also operating under financial services, under financial sector, is still one of the leading players in that industry. Looking at all industry average performance across key metrics, earnings per share, and the P ratio, and the earnings yield. So still the capital recommendation is also going to move up. Price is going to move up when the Q1 result is also coming out, which also believes will be stronger than what they did in the 2025 financials. The Transport Power, our recommendation is also buy. UCAP is also buy, and the FCMB is also buy. They haven't gotten to their target price. I get notification. I don't get notification on stock accumulation. Please send us an email so that we can profile your email. So as every Monday before this program, we usually send it to all the capital investors. So if you haven't gotten it, there's something wrong with the email. We can quickly reprofile your email. Thank you. So, Mr. Kolede, please. Yeah, Motor, please. You can speak up, sir.
Can you hear me? Good morning.
Yes, sir. Good, Mr. Kolede. Thank you, sir.
Okay. You skipped my question on Boa Cement. I was asking why it's a sell recommendation and what's that impact?
It's a sell recommendation because it's above the target price. Sometimes we look at the earnings capacity and other key metrics for BUA. If you look at the price the bar was trading before it moved to 320 naira, it was around 188. Later it moved to 217. But within a space of 2 weeks, we saw a lot of bad interest either from a member of the world of the shareholders. I think that some staff of the BUA Cement actually because they also notified the stock exchange, they bought a lot. And then sometimes when we are buying over 100,000 or in volume, it moved the price. So the current market price of BUA, about 320, is overpriced in our recommendation because the any capacity of the BUA Cement cannot justify the price that is currently traded. That's why we are putting it on buy recommendation. So if you look at their performance vis-a-vis that of Lafarge and Dangote Cement, in the industry, looking at the industry average, they haven't done very well as the other people as actually or other companies have performed. Even also looking at the earnings per share, what they have also declared as dividends for the final 2025 10 naira, it's like they are paying entire earnings per share out for the 2025 almost 10 naira. Why Dangote Cement and then the Lafarge, they have been able to also build their reserve and retain earnings over the time. So they cannot be under pressure to go to the world, to the fixed income market or to the money market to go and raise commercial paper or to go and raise bonds. So because they're also building their reserve, they are retaining earnings. So currently is overpriced. Our target price is below what is currently trading. Which is better to buy Oando Seplat Arade? Oando under the capital is on hold. Even for this week, we have also placed Arade on hold. We've seen a lot of major movements. We have to, if a stock has actually appreciated by almost 20-25%, it's important you monitor the trajectory and also do another evaluation. So, but for Seplat, we are good to go. It is in our strong recommendation. When you look at our top investor, the light first of the week, Seplat is one of the leading companies in that oil industry. Thank you.
Thank you, our esteemed investors, for joining this session. We hope that it has been insightful for you. So at this point, we'll be bringing it to a close. We'll be meeting same time next week. Thank you.